Welcome, dear traders. After a steep fall last week, Wall Street kicked in yuan on a pessimistic note. Stock futures are also dropping. Asian shares are down due to pessimism on Wall Street. It appears bearish sentiment that has recently gripped stock markets may undermine even the Santa Claus rally. And the Santa Claus rally refers to a seasonal stock market trend that occurs over the last weeks of December. However, it may not take place this year because of large outflows of capital from risk assets. According to Citigroup, a late-year rally mostly depends on how well the market has been doing in the period from January to October. If returns have been strong, a year-end rally may be on the cards. Nevertheless, a bull run in the stock markets looks unlikely given the recent 75 basis point rate increase and the Fed's strong commitment to aggressive tightening. In his last speech, Jerome Powell said that the Fed cannot guarantee a soft landing or even a moderate recession. He also pinpointed that the central bank is dealing with the economic shocks. Following such dismal remarks, investors began to factor in a protracted recession. This is why a late-year rally in November-December will hardly take place. The dot plot showed that interest rates might reach 4.4% by the end of 2022, the highest level since the 2008 financial crisis. For the US dollar, such a scenario is quite favorable. Stocks, including the Asian ones, are unable to recover due to a robust rally of the greenback, which has been unfolding for the past few months. Some analysts fear that it may trigger a crisis in the Asian markets. Today, the US dollar index reached a new high of 114 for the first time since May 2020. Investors are also prone to add the US dollar to their portfolios thanks to its safe haven status. Taking into account the mounting global economic uncertainty, demand for the greenback will only increase. The US dollar index is currently trading at 113.22 and it started the week in the upward channel of 112.94 and 114.53 amid rising US government bond yields and a strong risk aversion. Judging by the technical indicators, it may soar to 121, a high of 2001. As the Fed dispelled rumors about a possible shift to dovish stance, the Bank of Japan remains the only central bank that sticks to an ultra-low stance. It's facing even more challenges now. Last week, the yen hit the threshold of 145. As a result, the Ministry of Finance had to intervene in the foreign exchange market. Today, Japanese Financial Minister Junichi Suzuki said that the authorities stand ready to respond to speculative currency moves. The Ministry of Finance has recommended the Bank of Japan intervene if the yen approaches the 146 level. So this level serves as the critical threshold for the dollar-yen pair. The price may soon try to test this level. Given the latest statements of the Japanese policymakers, the regulator is ready to spend billions of US dollars to stem the yen's sharp falls. So the Bank of Japan will be the only regulator that could try to undermine the US dollar. However, such a scenario looks unlikely if there are no positive changes in the main indicators or a clear plan on how to weaken the greenback. Undoubtedly, every intervention could lead to a short-term strengthening of the yen. However, the bearish trend is sure to resume sometime later, as the chances of a steady rise in the yen are extremely low. The efforts of the Bank of Japan to boost the yen look like Sisyphean labor. In the Asian session, the yen-dollar pair was losing momentum. It touched 143.76 trading in the upward channel of 143.19 and 144.26. The Australian dollar was trading mixed today. It dipped to 0.6487, the lowest level since May 2020. It's down due to a buoyant rally of the US dollar amid the fall in pound sterling and stocks, risk aversion, subdued demand for commodities, negative news from China, and the risks of the global recession. Nevertheless, the Aussie managed to assert strength, rising to 0.6518. In the Asian session, the AUD USD pair was moving in the bullish corridor of 0.6485 and 0.6539. And that's all for now. This week, several Fed policymakers are going to make speeches. The US CPI index is on top. Germany, Spain, France, and Italy are also going to reveal their inflation figures. China and Japan are scheduled to publish industrial production data. All these reports are likely to impact market sentiment. Subscribe to InstaForex TV channel and keep close tabs on the market developments. See you soon!